In fact, if AI will be greater than mobile and cloud. These are the words coming in from Amit Bajaj, President North America at TCS. In an exclusive chat with my colleague Shereen Bhan, he said that clients are in a wait-and-watch mode ahead of the US elections. Here are a few snippets of that conversation.
We're at the spanking new office for TCS in Santa Clara in Silicon Valley. And joining me now is Amit Bajaj. Amit, what an absolute pleasure. Thanks very much for giving us access to the new TCS office. It's great to be here.
Thank you, Shereen. Thank you for having us, and hope you're having fun days in the Valley.
Well, I have to say, it's a lot of work, but it's been fun to understand what's going on, especially with AI. But I'll talk to you about that in just a second. You know, this is really the mother market for you, Amit, and you've been here over the last few years running the North American business. What's the sense that you get in terms of business confidence, in terms of a return of discretionary spending capacity, discretionary spending power? Is it looking any different today from the last time that you spoke at the end of the quarter?
I think the overall confidence is quite robust, I would say, Shereen. But in the short term, we're going through an election year. There is fair amount of tailwinds that we have from good employment rates, good consumer demand, but there are also sense of headwinds with government spending, with inflation, with interest rate environment. So I think while the demand is holding up and businesses' top line is quite strong, they are still taking a cautious approach, investing, but being measured.
And when you say investing, is it incremental investment or is it really redeploying capital from one area to the next?
I would say the latter. So AI is very, very real, and everyone wants to invest in that.
So where are they pulling money out of and putting it into AI?
And the AI has both an applicability on the growth side, but also on efficiency and cost side. So at the near term, you can deploy the technology in business as usual activities and fund your innovation and growth cycles from there.
So pause for now, you believe at least through 2024 till the US elections are out of the way, which is November. So it pretty much takes care of this calendar year.
Yeah, I would say measured. We are going to see spending, but there's going to be a dislocation of spend. And it's going to be, in certain ways, self-funding, at least for now.
You talked about the strength of the U.S. economy. You also talked about the fact that consumer confidence continues to be fairly strong, even though we've seen inflation still running fairly high, and we haven't seen those rate cuts, or at least a rate cut trajectory, which is what the markets want at this point in time. It looks like it is going to be, longer for rates to start to fall. But how do you see that impacting spends even post the election period? Because is there more trepidation and nervousness on the large deals, or will it continue to be cost rationalization?
So in certain ways, it's like a Goldilocks situation, right? Like you are somewhere in the middle. You're not in a recession technically, where customers are really thinking about large cost cut and cost-driven big initiatives. On the other side, while technology promises a lot of innovation, it has its own adoption cycle. So the technology innovation is exponential, but the adoption is linear.
Yeah.
So, one has to deal with people change aspects of technology adoption, governance aspects. So on the growth and innovation side, it is fairly a linear journey. So we are somewhere in the middle, so you're not seeing a very strong breakout either ways.
Conversational breakout, of course. This is the buzzword. Everyone's talking about it, whether inside the boardroom or outside the boardroom. But you're saying that at an enterprise level, adoption is going to take time before it gets to any kind of scale.
Yes.
In your conversations that you're having with your clients here, and of course, people that you collaborate with, you co-create with, where do you believe we're going to see adoption really kick off? Where do you believe that the pace of adoption is going to be faster? Which sectors, which industries, what kinds of companies are likely to move faster, be the early adopters at scale?
So I think, first of all, the opportunity is very real, and everyone believes in the opportunity. We recently did a global survey across all the businesses, and over 50% mentioned that the impact of AI, both on predictive and generative side, is going to be more than that of mobile or cloud. I mean, which has really driven the last 15 years of growth and innovation. And so it is very, very real. And they're already using it in certain use cases, scenarios. So, whether it's on the customer service side, whether sales and marketing, content generation, campaigns is another area in marketing. On sales side, sales co-pilot, sales buddies, responding to RFPs and generation of those standard content. So the generative aspect and where a large amount of content assimilation needs to be done, summarization, some insights. So all those pilots are already happening on the claim side. So I would say more growth focused. And then we see on the cost side, how do we reimagine back office, mid office using GAI, right? It's essentially a people and process centric business on that side. So how do we make it a tech first business? How does IT adopt AI in its own running? That's an important theme, and TCS has launched, was pioneer in that category. We launched the AI Ops category with our flagship platform, Ignio. So it's a lot of action happening, but technology is going to be deflationary in that sense, right? So we're creating the funding for the growth and transformation side.
Right, AI investments are the need of the hour. That's the word coming in from Amit Bajaj of TCS, President of North America. You can catch the full conversation today at 7:30 p.m. and 9:30 p.m. only on CNBC-TV18.